Derinia Mathura, co-fund manager of the Melville Douglas Global Impact Fund. Today, my fellow co-fund manager Matthew Urquhart and I are really excited to tell you about the impact investing space, as well as how Melville Douglas is helping lead the impact revolution with our Melville Douglas Global Impact Fund. We will discuss with you what impact investing is, what's fueling the growth in impact investing, the themes that we see shaping the impact investment space, as well as discuss with you Melville Douglas's investment process and philosophy with regards to impact investing. We will also share with you some of the stories behind our key holdings. The world is facing serious challenges such as climate crisis, water scarcity, poverty, and social insecurity. The stats are quite alarming. Lower birth rates means that most countries will see shrinking populations by the end of the century. The amount of carbon dioxide in the atmosphere is now at levels last seen since prehistoric times. Given the magnitude of microplastics in the ocean, we are now ingesting 5 grams of plastic every week, which is equivalent to eating a credit card. The planet's oceans have warmed at a rate of 5 atomic bombs every second. That's the cumulative equivalent energy of 3.6 billion nuclear bombs being detonated in the Earth's atmosphere over the past 25 years. Globally, an area the size of London is deforested every week. Almost 2/3 of the world's population experiences severe water scarcity for at least 1 month each year. Ultimately, when making an investment, the intent is to create wealth for the future. But given these serious challenges that we are facing and the alarming rate at which they are worsening, there is growing concern about the type of future we will live and retire in. As a result, investors are becoming increasingly conscious around their investment decision-making. While the search for healthy returns remains an objective, they are looking for opportunities that carry both financial returns as well as a measurable positive impact. This desire for change, as well as a shifting regulatory environment that is looking to address societal and environmental challenges, is fueling the growth in the impact investing space. There are varying degrees of sustainable investing, from pure ESG approaches, which uses ESG as a risk mechanism to price for risks that are not traditionally captured on a company's balance sheet, like operating in unstable jurisdictions and having poor governance practices. Under this strategy, companies may be included within a portfolio that have ESG risks, but as long as these risks are priced for accordingly, they can be included for consideration. In a more sustainable investment strategy, it would look to invest in companies that adopt progressive ESG policies. So at Melville Douglas, we incorporate ESG across our investment process. The Melville Douglas Global Impact Fund, however, takes this one step further by providing our clients a solution that comes with impact. So the key difference between ESG investing and impact investing is that ESG investing is a risk measurement metric used to ensure good business is done the right way, while impact investing is a financial tool that has the power to do broader societal good. Within impact investing, we focus on investee companies that are not just aware of the environmental and societal challenges that we face, but are actively trying to solve them by aligning their business models accordingly. At Melville Douglas, we are really excited to be leading the charge in the impact space, offering South African investors the first global impact fund in the direct listed equity space. The impact and ESG space is seeing significant inflows globally. Since 2015, there has been $600 billion of cumulative inflows into ESG-type funds, while active non-ESG-type funds have seen $2.8 trillion of outflows. The Impact Fund aims to identify long-term secular growth themes and then use the Melville Douglas investment philosophy to find quality companies that will benefit from those themes. We may invest in well-known established companies as well as companies that are earlier in their investment life cycle. These type of companies may entail higher reward, but may also come with a higher degree of volatility. This is managed by holding a diversified portfolio of 30 to 40 securities. Given that these companies may be in the reinvestment phase, investing significantly back into the business for growth, when valuing them, we may be required to take a longer-term investment horizon of up to 10 years. This is to capture the ramp up in profitability once the business has passed its main investment startup phase. For companies to be included in the Impact Fund, they need to demonstrate that they are driving a positive, sustainable impact through the lens of the UN Sustainable Development Goals. These are a universal set of goals that aim to achieve outcomes such as reducing poverty and protecting the planet. Our investment process begins with identifying long-term secular growth themes which are aligned with the UN Sustainable Development Goals. Based on our current research, we're focused on these three themes: transformational technology, climate change, and health and well-being. These themes help guide our idea generation. Our assessment of companies begin with determining where they fit in within one of these three themes. This is done via the Melville Douglas proprietary impact assessment. Our impact assessment considers both qualitative and quantitative criteria to determine a company's contribution to the UN SDG goals. From a qualitative perspective, we consider whether the delivery of a positive impact to society and the environment is core to the company's business model now and or in the future. We also look at the balance between the positive and negative impacts on the environment and society. From a quantitative perspective, we consider the revenue and profitability contribution to the relevant UN SDG goals now and forecasting that into the future. We then perform a full fundamental analysis of the company. This includes an ESG assessment. Our fundamental research focuses on factors such as sustainable and recurring revenue growth, the ability of a company to capture that growth profitably, the robustness of the business model, and whether management are effective custodians of shareholder capital. Once an idea has been through this process and has been approved, it is then considered for inclusion into the fund by the fund managers. Given the nature of our investment process and our impact assessment, we will naturally tend to avoid businesses that are involved in activities that are harmful to the society and the environment and that detract from the UN SDG goals. Areas such as tobacco, alcohol, and armaments. We believe these type of businesses are at a high risk of disruption, business model redundancy, as well as regulation. As mentioned, we are currently focused on these three themes. We believe that there is significant investment opportunity within these themes. We also want to be providers of shareholder capital to companies that are driving and shaping these themes and helping promote a more sustainable future. Technology has helped improve the lives of people around the world, and we expect transformational technology to continue to do that. The possibilities are endless. Imagine a world where doctors can perform remote surgeries thousands of miles away, powered by robotics, 5G devices, and super-fast networks, where people can have access to financial systems outside of the traditional banking system, where entrepreneurs can have access to tools to grow their businesses at an affordable rate. Technology is creating efficiencies and opportunities that help reduce inequality. Climate change is something that's affecting every person on every continent. And the worsening state of climate change means that we are seeing more severe and frequent climate events. We expect this to be the decade of climate action. The path to net zero carbon emissions requires investment in clean energy as well as a coordinated effort by capital markets, governments, central banks, and consumers. Investing in those companies that help combat climate change will become more important going forward. These types of companies will stand to benefit from technology and regulatory tailwinds into the future. Some of the enablers of this type of climate change technology are renewables, hydrogen, EV, and batteries. Technology is increasingly penetrating and aiding the global healthcare industry through areas like robotic surgeries and diagnoses. Robots tend to be more accurate than humans in diagnosis, with the added benefit that they don't suffer from fatigue and spread disease. This leads to fewer complications, surgical site infections, and shorter stays in hospitals. There's also significant investment to improve processes in the pharma and biotech industries, utilizing artificial intelligence, machine learning, and other software approaches to design better drugs, get them approved quicker, and to get them to market sooner and at a cost lower than what has historically been possible. I will now hand you over to my fellow co-fund manager, Matthew, to discuss the Melville Douglas Global Impact Fund holdings in more detail.
Thank you, Derinia. So essentially, this fund aims to generate growth with impact. Here, we encapsulate our investment thesis, their corresponding sub-themes, and the businesses which are reinventing and driving these sub-themes with the intent to address societal challenges and generate competitive returns in high-growth industries. Let's take climate change as an example. Within climate change, a key sub-theme of ours is the energy transition. This refers to the transition within the economy from a fossil fuel-based economy to one that is reliant on net zero or close to emitting transportation. Within this, we think biofuels are key for this integration. Biofuels refer to the refining process of taking zero to low emitting feedstock, such as corn within your agricultural sector, or the likes of used cooking oil from restaurants, and refining that into 100% interchangeable renewable fuels. Neste is one of our key holdings that do this. Neste make 100% interchangeable diesel from used cooking oil collected from restaurants and a host of other low-emitting feedstocks. Their renewable diesel reduces emissions up to 90% compared to your traditional fossil fuels. As part of our impact analysis, each sub-theme and business is aligned to a number of UN Sustainable Development Goals. This allows us to focus the impact of the fund, as well as measure our impact in line with global best standards. An example of this is within our health and well-being core theme, we see financial inclusion as vital. In order to reach financial inclusion, one needs to aim to achieve 4 UN Sustainable Development Goals. That is, UN SDG 1, no poverty, UN SDG 3, good health and well-being, UN SDG 8, decent work and economic growth, and lastly, UN SDG 10, reduced inequalities. So importantly, the Global Impact Fund is SDG agnostic. This means we do not target any specific SDG, and our process focuses more on the degree of contribution to those SDGs through our impact analysis, rather than trying to achieve all 17. We therefore do not have exposure to all 17 UN SDGs, and the composition of this will change throughout the life of the fund. On the screen, you can see the number of UN SDGs that we currently focus on and their different composition within the fund. Let's take Enphase Energy as an example. This is our first case study of two. Enphase Energy's purpose is to advance a sustainable future for all. They are reinventing the world's solar market to one that is ready to meet the world's energy demands. Enphase have revolutionized the solar industry with their microinverter technology and produce a fully integrated solar plus storage solution on one single platform. They are the world leader in developing microinverters. The key difference between a microinverter and a traditional inverter is if a system with a central inverter fails, solar production stops completely. With microinverters, one puts one microinverter per solar panel within a solar array. This means that if solar production stops working within one panel, this does not affect the entire system. Enphase's microinverters also use a very simple plug-and-play technology, which enables the ecosystem to add various elements onto this traditional energy system. If you look at the illustration on the left, we see how Enphase's microinverter attached to a solar panel or solar array allows attachment onto the grid, allows for backup storage. This allows you to run various loads off of it, such as washing machines, dishwashers, TVs, etc. One can also attach a backup generator as well as a fuel cell. And more recently, with their Clipper Creek acquisition, one is able to do electric vehicle charging within their ecosystem, but also use your electric vehicle as a backup power source for your entire Enphase ecosystem. So their system helps communities around the world be more resilient in the face of natural disasters and grid outages, ensuring that a home is powered during periods of inclement weather, delivering energy independence and peace of mind. As Enphase continues to grow and gain market share, it is accelerating the positive impact and contribution towards increasing the renewables energy mix globally. In our view, Enphase's unique inverter technology will capture a growing share of the inverter market, owing to superior energy yield and lower lifetime cost of ownership relative to conventional string inverters. We forecast growth in solar installations trending at 15 to 20% CAGR through the mid-2020s and easily exceeding GDP growth for the next 20 to 30 years. So how does Enphase Energy fit into our overall fund philosophy? Stepping back, Enphase Energy is key to achieving our climate change core theme. Within that, we focus on 4 UN Sustainable Development Goals, which we hold Enphase Energy accountable to. This is UN SDG 7, 9, 11, and 13. As Derinia mentioned, we use various impact matrices and assessments in order to measure such. On the screen is a high-level view of this impact matrix, which we measure each particular stock on. We look at a number of qualitative questions and quantitative questions. Within the qualitative questions, we look at whether the delivery of positive impact is core to the business model or not. And is there a favorable balance between Enphase's positive and negative impacts? Then within the quantitative side of things, we dive deeper into the income statement. We look at what's their current revenue exposure to achieving these SDGs and what that will be in 10 years' time, as well as what their current operating profit exposures to these SDGs and what that'll be in 10 years' time. That then gets aggregated through a weighted score, and in Enphase's case, they score 100%. So diving into a number of key SDGs, starting with UN SDG 7, affordable and clean energy. Enphase Energy shipped 8.8 gigawatts DC of microinverters and deployed more than 1.3 Enphase solar systems worldwide. As Enphase continues to grow, they are accelerating the positive impact contribution towards increasing the renewables energy mix globally. With regards to SDG 11, Sustainable Cities and Communities, Enphase has deployed their solar systems in 130 countries. For us, sustainable urbanization is a priority for both the residential and small commercial applications of Enphase's products and services. Lastly, with regards to Enphase, we look at SDG 13, or climate action. Enphase has helped offset 20.8 million CO2 equivalent emissions. This is equivalent to providing 3.5 million homes with clean electricity for a year. Furthermore, the Enphase storage system helps communities around the world be more resilient in the face of natural disasters and grid outages. Our last case study for today is Shopify. For us, the success of millions of entrepreneurs is critical to the world's economic success. Every new business adds value to the world. However, entrepreneurship is challenging, which is why Shopify helps remove the barriers to entry. They create tools for anyone to start and grow a business anywhere, positively impacting commerce for independent business owners. Essentially, Shopify enables entrepreneurs to start and run a business more effectively through their end-to-end merchant infrastructure. Here, we can see Shopify's integrated back office, which they provide these entrepreneurs, as well as their front office. When you look at Snowdevil, a key client of theirs, their back office solutions looks after payments, capital, marketing, analytics, apps, inventory and fulfillment, order management, and shipping. A lot of these challenges many entrepreneurs face. Then on the front office side of things, these entrepreneurs are able to sell their products and services on one platform through every channel and through any device off of Shopify's integrated merchant platform. As you can see on the illustration on the left, they are able to sell this online through brick and mortar stores and the likes of Amazon, Facebook, as well as various pop-up stores. We see Shopify benefiting from retail sales moving online, which enables even the smallest merchants to sell online with monthly fees as low as $29. Shopify has scale, a strong brand and partner network that makes its competitive advantage very difficult to erode. And they continuously innovate to address the pain points that merchants face, as we spoke about earlier. Shopify views its total addressable market at $153 billion, applying its current average revenue per user of $2,258 to the 68 million retail, small and medium-sized businesses globally, implies a long runway for growth, given it serves 1.7 million customers today. Stepping back with Shopify. For us, the key focus here is how Shopify boosts economic prosperity within our transformational technology theme. The key SDGs that they aim to achieve, in our view, are SDG 8, 9, and 10. From an impact perspective, they score 90% on our impact matrix. Now, diving a bit deeper into the underlying SDGs, which we think Shopify subscribes to and focuses towards. Firstly, starting with SDG 8, decent work and economic growth. Shopify helped enable merchants' economic activity worth $307.4 billion in 2020, and $12.5 billion of revenue was generated through their partner ecosystem. With regards to SDG 9, industry innovation and infrastructure, Shopify supported 1.7 million small businesses in 2020 in the midst of COVID, with over 690,000 small businesses being able to sell internationally. This was due to their comprehensive digital services offering at relatively low cost, enabling small businesses to enter and compete in the global market. Last but not least, SDG 10, reduced inequalities. During 2020, Shopify's businesses and their platform helped support 3.6 million full-time jobs around the world. We think this is significant, especially in achieving reduced inequalities. In closing, we'd like to say thank you for listening to our presentation. We hope you found it as useful as we did, diving into this exciting new space and opportunity. We are very proud that our Global Impact Fund now officially has a 1-year track record. It is now currently open to our Melville Douglas clients, and there will be a retail class available for everyone soon. We thank you.